Welcome to the Due Diligence Podcast. I'm your host, Robert Kraft, and for more than 10 years with SNN, I've been doing interviews with MicroCap management teams at investor conferences globally as well as online. Our SNN Live CEO video interviews are meant to pique interest, and then one can discover more by going to that company website. But personally, I always have more questions I want to ask. On this show, I'll be chatting with public company executives from microcap companies, and we'll dive deeper into companies that are rarely profiled. Microcap traditionally is overlooked, unloved, and absolutely never featured on legacy financial media outlets unless something material is going on. That's a good story. With my experience interviewing management teams, having interviewed most of them before, I've built up a network of companies, so there will be no shortage of content. Furthermore, this is an opportunity for me to showcase some of the qualitative lessons I've learned from guests on the Planet MicroCap podcast. You can expect high-quality interviews with management teams that may have exposure to broader macro trends that you may never have thought of. One of the many reasons why I love the microcap space. So if you love microcaps and especially love learning about companies before the professionals do, let's start our due diligence. This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast. My guest on the show today is Tim Eriksen, CEO of Solitron Devices, publicly traded company. The symbol is SODI. Headquartered in West Palm Beach, Florida, Solitron Devices manufactures power semiconductors and integrated power solutions for systems that demand the ultimate in performance and reliability. Customers in aerospace, defense, industrial, and space rely on Solatron's innovative products to develop smaller, lighter weight, higher efficiency systems level power solutions. Solitron Devices has been requested a few times when I've crowdsourced who y'all want to hear on the show, and Tim did not disappoint. We had a wide-ranging discussion about the history of Solitron Devices and how Tim got involved, crossing over from shareholder to CEO and understanding the defense industry, the downside risks, OTC markets, and where he sees the company in 3 to 5 years. With that, please enjoy my conversation with Tim Eriksen, CEO of Solitron Devices. Welcome to the Due Diligence Podcast. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BOBBYKKRAFT. And joining me right now is Tim Eriksen, CEO of Solitron Devices. It's a publicly traded company. The symbol is SODI on OTC. And with that, Tim, thank you for joining me today. How are you doing?
Good. My pleasure to join you.
It's great to have you on. So I've known the story for a while. Been following you for a while. You know, this is we're kind of branding this the Tim Eriksen week, if I may. But I figured before we got into your investor background and all that we're going to do on the on Planet MicroCap podcast, I wanted to dig into the story of Solitron Devices a bit further because I get questions about it and requests to have you on to talk about it all the time. So to start off, can you give us that one line that best describes Solitron Devices?
No. A one line that best describes?
No. Not one line.
Not one line. I cannot do that.
Okay. How about 2 lines?
I don't know. Solatron is a supplier to the defense industry for electronic components. So
that's a great one line. That's a great one line.
There you go.
There you go. All right. So I'd love to get into a little bit of the history of the company. I mean, you came in, became CEO July 2016. So what give us a little history prior to that. And then what was it about the company that attracted you and wanted to participate further?
Wow. History wise, I mean, this was actually a stock darling of the late 60s. I think they got listed on the New York Stock Exchange, as kind of this future technology company. It went through the years and grew in size. Went through a bankruptcy, I think 90, 92, right in that range. Reverse stock split, just really struggled. It wasn't really profitable. New CEO came in, And really the company kind of went dark, as some of the little companies do. It was no longer on an exchange. It was over the counter. They weren't holding annual meetings, for about 15 years. And then the stock kind of was getting written up as a value play over the years, starting in 2013, 2012. Nate Tobick, Jeff Moore, and a couple other people were writing about the stock because it had a lot of cash on the balance sheet and it was profitable and things like that. So it got my attention, and I love to piggyback on activism. I never really desired to do activism. I'm like, this is great. Somebody does something, they unlock the value. I don't do the work, but I get all the benefits. This is great. So I started buying the stock, and there was a couple large shareholders that I thought would do some activism, and they didn't, and then I crossed over 5% accidentally, didn't even realize. I'm like, right now I have to file, and kind of came to the conclusion that I should do it, and then having to learn how to do that, and go through that process. So this is, 2015. And what really made me want to do it, I should point out, activism's hard. Solatron was really unique. In 2014, 13, the shareholders voted. That was the first time they held a meeting. I think it's 13 or 14. And the shareholders voted against the directors, which you don't see directors lose when they're unopposed, but they lost. There was a pretty strong shareholder base that was upset. So I mean, if you're going to do activism, you want to be able to win, because you're going to have to spend a lot of money, at least $100,000 probably, with legal costs and doing proxies and hiring a proxy solicitor and going through all that process. So, I decided to do that process, which was challenging. It's a staggered board. You're not even gaining control. You're trying to just get a seat at the table, or 2 seats at the table at the time, of the 5 directors. We won the proxy fight in 2015. Then you're battling in the boardroom, and just tough, gut-wrenching going into those. It's not fun being a director where you're just like the enemy sitting at the table and trying to work together, especially usually after all the things that have been said in the fight. But anyways, we worked through that, worked with the directors, and then really lucked into a situation to make a COO change. He could have been CEO, but that's just the way we structured it, with Mark Madsen in 2016, and getting a settlement with the past CEO, and then kind of working from there, of really finding out, what did we actually gain control of? Oops, it's got a lot more problems than we thought. And then working through all that. And then we had an audit nightmare, and in 18, 19, we just went through some difficulties, but then really hit things really well in the last year and a half or so, as we had made all the improvements, made all the changes, revenues started to grow, the bottom line was really improving, and things like that. So it's, now we're at a more challenging stage. We're not this little $2 or $3 stock. We're an $8 to $10 stock, and it's like, what are you going to do next? And it's always, what are you going to do next? So
yeah, and that's a long time, right? From taking over to then, finally ironing the things out. I mean, take us through your mindset during that time. I mean, what was that like?
Yeah, I think most people that are value investors kind of walk in and they're like, well, this has got a lot of cash, and I'm, quote, getting the business for free. This will be great, and all I got to do is improve capital allocation. The simple fix. It's kind of like thinking you're going to flip a house. All I got to do is
simple.
All I got to do is paint it, and I can flip it and do this money. And then you get inside and you're like, oh, there's structural issues, or there's plumbing issues, and this and that. And that's really what we found out, is like, ooh, there's customer relationship problems. There's, employee issues. There's just all kinds of things that we had to work through, that I'm thankful, because I don't think I wouldn't have had the skill set to do it. The COO was someone who could come in and work 12, 14-hour days and just keep grinding away at those type of problems. Finding a COO or CEO that'll do that, and in a MicroCap where they're not making, 7 figures or even high 6 figures is tough to find that skill set, because in a MicroCap too, they got to wear multiple hats. It's not like, oh, I just manage things. It's like, man, he has to know finance. He has to know operations. He has to know marketing. You have to know everything to deal with every little issue and problem. But we had the right person, and he worked through all that. So it's like, I don't like it when people give me credit. I just know I'm the public face, but I know that the credits goes to him and a lot of other people. So.
So what were your initial thoughts about the business prior to coming in and actually seeing all the plumbing and everything like that ended up being either totally false or now you changed up your thesis? So like, oh, okay, these are the things that we really need to focus on to unlock value.
Yeah, what was false was I thought there wasn't really any problems, in that, whether you pay out a dividend, buy back stock, you can do something on the capital allocation, and that's about it. When we walked in, we soon found out that our largest customer was trying to get rid of us, and we didn't even know. So we're like, all of a sudden, we're facing possibly losing 40-60% of revenue. I mean, just decimated. Doesn't matter you have all that cash because you're going to be bleeding it fast. So it wasn't even to grow a business. It was just survival mode. And because what had attracted me was, wow, these are defense industry contracts that, even though they're not long-term contracts, once a product is in a system and tested, they don't just start replacing pieces. They test the system as a whole, and they're not going to replace pieces. Maybe every 5 years or 10 years it gets a refresh, or they redesign some things and certain things are added or taken out. But it has a lot of stickiness to it. But if you're out of those programs, you're not getting back in, and you're not easily getting into new ones. So it has some benefits, but it had some real challenges that we were facing. And it slowed down what we thought we could just add on to the business. We had to just survive with the existing business and work through all that. But we did, and here we are today.
Very good. All right, so we're gonna take a step back because inevitably there are some people that are gonna listen to this and be like, all right, what does Solatron actually do? So can you take us through the business itself, some of the business lines, and exactly what you're selling and how you differentiate yourself from your competition out there?
Yeah, I am. Just to be clear, I am not, an electrical engineer. I'm not an expert at electronic components. I'm not going to speak to how everything's done. We manufacture and assemble electronic components that are used in just a ton of different defense applications. I mean, they can be used in jets. They can be used in missiles, missile launchers. They could be into satellite launchers. There's just all kinds of electronic components that are moving about power to make something work. A lot of things that don't even have to work very long. They could be in a system where it's like, we were dealing with a component that I think runs for, it's either in the seconds or within a few minutes. I mean, that's all that thing has to work for, and that's its life, but we have to manufacture it and we'll test it for hours, although it's only got to run this little narrow thing. So you have these components that are not off the shelf. So they're kind of a high cost, low run components. Maybe there's a system where we're shipping 100 or 1,000. These are nothing that are in the tens or hundreds of thousands. I mean, I don't want to speak off the top of my head. I mean, I don't think we're shipping 50,000 parts in a quarter. I mean, it's just not. This isn't high run, low price. This is low run, high price. So you may have an average component price of $100. So maybe we're only doing, anyways, I don't want to do the math off the top of my head because I don't want to make a big 10x error there. But anyways, so these components that are in the defense industry, like I said, on a broad range, and the stickiness of the programs, which is a plus, but it's a negative in trying to grow revenues. You can't just, if we tweak price, we can change maybe our volume and maybe our profit dollars go up because we've increased our volume, but at a lower price. Or we can change our price, but the volume is what the volume is. They've already stated we're buying 500. So, and when it gets a larger contract, with one of the things in the defense industry that people have to understand, and we only have one or two where this comes in, mainly one, and that's changing. But if you have a large contract, then it goes under a whole pricing thing where the government come in and say, show your prices, you can get this much margin, and that's it. And you got to document everything from beginning to end. And we had that on our largest contract. Right now, I think it's dropped because they've increased the size of what's necessary for that program, 2.5, 3 million or something. And we're just on the cusp with our largest. So, and all the other ones are below it, and we can control our pricing a lot better.
Gotcha. So Tell us a little bit about selling into, military government agency. I mean, that there's both a long runway with the consumer to actual getting selling the good, right? And then but then there's stickiness, right? Once you're in, you're in. So tell us a little bit about that.
Yeah, once you're in, you're largely in. The refreshes can, there's certain, like our largest program, we had, I'll just use a number. Say we had maybe 20 parts in there, and then when it did a refresh, it went to 12 or 15. I mean, it shrunk. And sometimes that happens. Sometimes it can expand, or they can combine multiple components and things change. But just incredible stickiness and the length of time of some of these programs. The government kind of just keeps modifying, especially like missile systems. They just keep modifying, and something may be around for multiple decades. We did an end of life on a missile program that started in the 1950s, and we did an end of life order with Australia like 3 years ago. So you get the whole US life cycle, then it goes to foreign sales, just ongoing foreign sales, then replacement parts as the system's still going, and just kind of keeps going. So that's beautiful for us, is we can look at our largest program and go, wow, we know the US from public sources. This has 10 or 15 years. Then we're going to assume we get 10 or 15 years of foreign sales. We can be fairly comfortable that, we have a 30 or more year life, with that product. We don't know exact volumes or different things, but I mean, that is really nice. The downside is it's like, we think we've really improved our capabilities, and we want to get into some of these existing systems or new systems, but especially existing. It's like, how do you get in when they don't want to really let you in unless somebody really fails and is a problem? Then they'll open it up and you can get in. So you're kind of rooting for other people to mess up so we can get in. And that happens a little bit, not as much as we want. But then how often do they do new systems? It's not like you don't read in the news about something new coming out. It's always tweaks of existing things. A lot of the missile systems may have started as a jet based, and then they kind of modify it to make it land based. It's not a whole new system. It's just adjustments and tweaks. So it is really challenging to get into newer programs. And then COVID was just a nightmare for that, because they're like, oh, we don't do on-site visits, and if you didn't do anything that was that new, experimental. So we're just trying to develop products that will fill niches, kind of go to customers, say, hey, what do you need? What are you running into? What's your problem? What are you not being able to solve? That we can throw resources at and solve. So.
I was gonna say, I mean, who are you competing against right now, or traditionally, I guess, as well?
Yeah, you always have to list competitors in our 10K. Well, Micro Semi or this company or that, and it's like, sure. But yes, you're competing, and they're in the same industry, but it's like nobody's competing on that contract, because they don't reopen it every year and say, oh, we want to retest the whole thing and have a whole bunch of different components. So once you're in, you're not really competing. So when something new comes out, which may be every 5 years or something, there's multiple competitors going in then. And then that all depends on size and scale. We're on the small end, whereas most of the bigger companies aren't going to deal with that. So we're not, competing against large, mega caps, a bunch of small caps, family owned businesses, things like that.
Sure thing. Do you go outside the US at all and compete for other government contracts, or do you strictly only US?
Yeah, our foreign sales are usually it's a US system that is being sold to a foreign government, like, some whatever the system is that then goes to, we have certain things that went to Greece now with everything going on. And it may flow through the US government, or that government may contact us directly, but it's still basically a system that's in the US or US design that the government's approved for foreign sales.
Got it. So you alluded a little bit to, some of the issues that impacted the company via COVID. We have now it seems like that was almost yesteryear with all the new, with inflation, everything going on right now. So take me back. How did the company get through some of the COVID stuff that was going on, and then maybe even take us up till now, and how it's pushing through some of the other issues that we're dealing with from a macro level.
It was, when it first started out operationally, it wasn't a big deal. We're in Florida, which is a state that was one of the first to open. Without getting into politics, it was one of the first to do that. And add to that, we're in the defense industry, so we had the kind of an automatic exemption from any shutdowns. We even had a little laminated card or whatever that our employees could show somebody when we had those first few weeks of not even supposed to travel much. We could say, no, we're an essential business, we have to do that. So it didn't hit us operationally really at all initially. And in some sense, at first you feel like, wow, this, how do we, what is the impact? But over time, this impact just kept growing and growing, because all of a sudden we're realizing our order flow was getting impacted. So it didn't show up in initial numbers, and even in the initial orders, because those had been planned 6 or 9 months before. It really began to hit for us 9 or 12 months later. All of a sudden you start seeing a little softness in ordering, because they're operating a little slower on how fast they're doing things. And then really kind of hit us probably the hardest, I would say, in the last, 3 quarters or so, of just softness on the order side. And then impacting, because we can't do site visits. How do you go and say, hey, let us help solve your problem? It's like, no one's even at the office. We're still struggling in a lot of states to be able to go out and meet them. Maybe you can do a Zoom call, but I personally think the productivity level at a lot of the defense industry is low lately, and they're able to kind of get through that by the nature of that business. I think, with being able to pass on a lot of costs, but it's impacting the smaller players a lot.
Gotcha. Yeah, no, I would have thought maybe with, everything going on with, the horrible war going on in Ukraine, and wanting to supply, provide supplies and whatnot. And this might speak to a little bit of my ignorance as to what exactly is being provided and how you guys fit into that. But is there any sort of connection or tailwind to, some of what's going on there?
There is, but the speed is not like, wow, the war starts and we're getting phone calls within a day or two, or, hey, price this, we want this. We did, I think it was post-war, we did have a government, reach out and place an order for a system. And we did certainly get indications from those companies we supply that there's, in a sense, a optimistic upside to the past order or potential revisions. But you're just like, wow, this really functions slow. And it kind of shocked me of how maybe lack of how unprepared we were for this type of thing, in terms of stockpiles and different things, that we're not as prepared as we should be. And I think a lot of other governments realize, wow, this could be over if you have, in a sense, everybody thought Ukraine would be a very short war and be over in a week. And it's like, well, we couldn't even get supplies to them in a week. It'd be hard to do it from Eastern Europe, but you certainly aren't manufacturing something that you have to then source, from Asia that has maybe a 6-month lead time. You either have to have that on hand or you're in trouble, right? And that's where it's like, to me, they have to either kind of readjust. This is getting in way out of Solatron, but readjust in terms of stockpiles and things like that. But indirectly, that would benefit the company and make us better prepared. The more stockpiles you have, because we would have already done those orders or they get replenished. But I'm not thinking of it from a Solatron only, but just from a safety of the world standpoint. You got to be able to move the equipment and things quickly and know what may be needed quickly. And and we are seeing, benefit to the company. I think it will come about. We're seeing, Poland and other, Eastern Europe, I can say Eastern Europe countries, Eastern European countries, increase their defense budgets, by 50% or different things that's going to flow through. How quickly we'll see it, I don't know, but it will tend to flow through to broadly to all suppliers. So we'll get some benefit from that. It's just too early to know.
Gotcha. So now I'm going to go to some of the more corporate questions, being public company CEO and there's a lot we could get into here because, especially with Solatron, it's on OTC, but not fully reporting. So, I mean, and with all the new rules that came into play last year. So I'd love to hear your perspective being CEO of a company that if I'm not mistaken, you didn't cross over to go to fully reporting on the QB or QX, it's still on OTC, but on the expert market. So give me the full wrap as to where, what your thought process was there and everything.
I mean, we're unaffected by the whole 15C to 11 expert market stock and stuff like that. But we are an SEC reporting company. So we have those higher standards, kind of a higher audit, we costs, we have those timeframes that we're supposed to meet, which we're currently delinquent on our 10K, but we're that'll get done or is getting done. But those are things that reflect on the company, those challenges of meeting that 45-day deadline, and which you also have if you're OTC. They'll change the symbol and as soon as you're late on things, and if you're too late, then you end up expert market. But so those are challenges, that we certainly have to have. And small companies, you realize, wow, you just don't have the resources that are expected to have. It's like you don't just answer a question in a few minutes or push a button. You have a lot more manual systems, a lot more. In our case, we have a lot of manual inventory. We do quarterly inventory counts and true everything up. We're almost, the thing that shocked me is like we function like a clothing retailer did in the 1980s or 90s, where there's like, oh, it's end of the year, we got to close everything up and count everything and tabulate it, and then we know what our costs were. And it's like, it's accurate, but man, that's manual and slow. But you don't just easily have tracking of every piece and part, with little barcodes and scans. It's like, you don't just implement that, or the cost to implement that. So there's challenges there. But I mean, in terms of the listing and requirements, it's there's nothing recently that changed. It's just the ongoing challenge.
Got it. And what would you say that investors, after that meeting you and knowing your history, maybe following Cedar Creek or even following the company for this many years, when you're doing some of your Q&A or speaking with investors that might be new to the story, what do they still get confused about, if at all?
I don't know.
Like, what's some of the frequently asked questions that you get from investors that you're like?
Well, I mean, in terms of the company, yeah. I get the standard questions, even things that you brought up of like, what exactly do you do? You know what I mean? Because you have to balance that of disclosure without telling competitors exactly what you do, who you do it for, and how much you do it for is not good if you're in anything that involves a potential bid. So you don't like to do that. We tend to be really tight of which programs we're in. Sometimes it slips out in terms of larger ones, but we usually try not to detail that. Probably one of the big questions I get is the fear of customer concentration, because they'll go, oh my gosh, Raytheon's, what is this, 60% of your sales? What if you lose that? And having to explain through, yeah, Raytheon is, but Raytheon has hundreds of different programs and systems they're in, and they're all kind of independently functioning and interacting with us. So it's not like you have all of Raytheon or none. It's like we would have to be suddenly the loss of 20 or 30 different programs that we give components for to Raytheon. And it's like, that's not likely to happen. Raytheon's just not going under. The government wouldn't even let that happen, I don't think. So that customer concentration risk is often misunderstood. I wouldn't call it a strength, but it's just something you have to accept. And you also don't go, wow, we want to diversify away from that. Like, no, as long as we're program diversified, it is what it is. Just take the revenue wherever you can get it and be happy with that.
Very good. No, that's a good distinction because, of course, I've had many CEOs on when they talk about, that customer concentration risk. If it's a bit nuanced, like what you're saying, then it's a different conversation versus just like that one client, and then they cut everything off.
Which, yeah, and in MicroCap land, that's usually devastating. What I mean? It's like, if you saw 60%, this is a huge red flag that any investor should think that is the right thought initially. But this is, I think, one of those few exceptions.
Gotcha. So I also want to get into this because I ask every CEO on here this question as well. And you kind of touched on it a little bit, having to do with downside risk. But in your opinion, what would you say are some of the company's downside risks from an investing perspective?
Downside risks. Wow. I mean, in a lot of ways, the biggest is kind of a macro picture, defense spending,
Right.
But even then it's like, we'll have periods where you think, maybe we're going to live in a world where we don't have as much, conflict or war or things like that. And defense industry spending can be shrunk. I think, you have the Democratic Party is much more for at times shrinking that, and being able to use that more for social programs. So I don't mean to make it political, but there is always a risk because there's a push for it because it's a big percentage of the government's budget when you have 20, 23, 25%, going to defense industry. So there's always that risk, and they do get squeezing. We had, 10, 15 years ago, we had this whole sequestration process, and they were like, oh, we're not going to let it grow more than inflation. And that gets really challenging to the business and things. So there is certainly that big picture risk. I'm not in a state where a situation where I'm like, wow, fearing this massive blow to the company. I'm more focused on the not getting the growth that we're striving to get. So that's a much better problem to have. I think we move past the risk of loss of business. I'm not saying revenue is going to always grow because that's just timing and different things like that. But I think we certainly stabilized it and have really good relationships with customers so that we can then work on trying to grow it. It's just been really frustrating trying to get, that interaction and that product development because we're wanting to, we know we have really good operating leverage, as you kind of saw in the last year. And if you go back quarter by quarter in the company, and say, well, what's the margin when the sales are 4 million or 3.5 million in the quarter or 3? And you just see this significant operating leverage that we have. And it's just, can we maintain that? And the only way to maintain that is to have higher revenues. The only way to have higher revenues is to have higher bookings. The only way to have higher bookings is either have the program itself expand to where they order more, or we got to get into new things. And we can't control the program expanding. We can control getting into new things only so far. So that's why there's more frustration there. But it's not like growth is really priced into the stock anyway. So, in my opinion.
Gotcha. That was good. That was a good say in your opinion, of course. So then on the other side, where do you see the company in 3 to 5 years, or where do you want to see the company in 3 to 5 years? And what would you say are some of the inflection points that will get you to where you want it to be?
I mean, we don't sit down and try to do hard, fast revenue targets because it's just not an industry where we can do that. I think, there's certain businesses where you could totally say, we want to do 10, then 15 million, 20, and kind of have targets and really have a concrete plan for getting there. We would get very frustrated if we try to do that. We can certainly do a great job with the existing business and then work on growing the business. We can model out what we think we look like at additional targets, whether it's a consistent 12 million annual revenue or 16 and 20, and then be prepared for that in terms of do we need to do anything facility wise or things like that. And it's like, wow, we're moving to a new facility. We're single shift. We're working 4 10s. It's like, you could double shift, you can weekend. It's like, you're not maxing out this facility at all. So there's not like these big inflection points where it's like you would grow and then stop, or margins would get squeezed and then you have to have something happen. It's like, no, we think that operating leverage is really good. Yeah, if you go to a second shift, you add supervisory stuff, but any business that's moving from single shift to a second shift is still going to have great economies of scale. So it's just that desire to drive the revenue, because that's what can make this thing a huge home run. But it's not easy. That's the one thing I've learned. It's like, this is really hard. On paper, revenue growth is easy. I just put 12% and then just multiply it out and project it out on the spreadsheet. But in reality, it's really hard.
I got to ask you, maybe this is a dumb question, but I like asking dumb questions every time to time.
Sure.
What do you think is harder, being a public company CEO or, running your fund at Cedar Creek?
Well, since I'm only a part-time CEO and I have no desire to be the full-time CEO, I know CEO is the operational person is so much harder, I think. I'm sure there's other people that would be like, wow, I would never want to do what you do and look at stocks and do all that analysis. But it's like, I find that a lot easier for me to do that, at least with my style of an approach, to just grind away, look at stuff, go, nope. Oh, that's interesting. And dig in more. And that's attractive. Now, figuring out, how much of in the portfolio do I want to have, what's it really worth? So I know when I'm selling is a lot easier than just dealing with, 80 employees and scheduling and customers and problems and frustrations. It's like, I have to deal with the emotion of the market going up and down, not 80 people and their lives. And not, I don't mean anything against people, but it's just, this is much more where I'm at. I'll never become I don't think full-time CEO at all. So it's a great blend though. I mean, it's Mark and I are just, I think, good friends, which we've grown into. I didn't know him before he became COO, but just it's a good working relationship that complements each other. It frees him up from, focused on dealing with shareholders, answering questions, doing filings,
talking to me.
No offense to that, but it's like,
no, it's true.
That takes a couple hours,
Yep.
And, so it
it makes total sense. Yeah, no, I say it like complete poking fun at myself because it's the truth. This stuff does take time, right? And getting out there, telling the story, and that's why we try and keep it a little chill here.
My wife will laugh because it'll be like, I'll say, I have a shareholder call, and she's like, that was an hour and a half, and I'm like, yeah, they had a lot of questions, and it was just like what?
How do they have so many questions about your little Solitron Devices company? Like, what?
Yeah, but I mean, that would really hurt operations. You take someone that in a smaller business, you realize that they're wearing so many hats, and it's like, I can't even fit an hour and a half into Mark's schedule or something. It doesn't work that way. They don't have that free time. This isn't so huge and compartmentalized that the CEO has, I got a wide open schedule today.
Yeah. Well, Tim, I mean, speaking of, your duties kind of being on the public facing side with as being part-time CEO, I mean, you have a number of relationships with a lot of shareholders, a lot of folks that I've interviewed and chatted with before. I mean, how much have shareholders influenced any of the decision-making process or if at all?
Well, I listen. Do I always do? I mean, most of the shareholder base, the one good thing is the shareholder base is in a sense attracted to the company largely because of the, my approach or my philosophy, that they've already kind of share that. It's not, there's a few shareholders where it was like, they didn't come to the business because they heard about me. They were in there either before, and it's like, no, I want a dividend, or I want this, or they're like, they have a different thinking process. The ones that are value oriented are kind of like, no, I trust you to do the right thing with the money and make the right calls on that. But other people might just be like, no, give it to me now, right? And so you do have some disconnect, but for the large part, man, it's besides for me owning a good chunk, Mark owning a chunk, people that are in my fund, people that follow, it's like it's such a value-based stock right now. It's not difficult, and in that sense, it's almost like the same as my fund. I don't have people that are calling me upset, about things or about performance.
Sure thing. All right. My final question for you here on due diligence. And I usually end with asking every CEO or management team member on here whether or not they enjoy, being public company CEO, chairman, even CEO, president, stuff like that. But I mean, for you, has it given you a new appreciation for what public company management teams do? Because I mean, I don't know if you were doing it, if you had any kind of roles like this prior, but, especially now since running the fund, since I think 2006 and talking with these folks, do you have that new appreciation now that you're on the other side?
Yeah, it's been a huge learning experience. It's made me appreciate the difficulties of certain things. Spreadsheets, everything seems pretty straightforward of how things work. Just personnel challenges to difficulty of growing a business, the difficulty of getting filings in on time, which doing all that reporting. And then when you're smaller, you realize, wow, that you just don't have all the resources. That that person has to do 2 or 3 things, and somebody gets sick, and you realize we don't really have a lot of extra coverage. You just can't, because you're running it leaner to stay profitable. So the MicroCap stuff is really shows you a lot. The board experience has been really good. Once you're inside, you're seeing things. You understand when a little bit about when managements are open, when they're a little closed. Some of them are very closed even to their board. What's appropriate, what isn't. Just working through all those things. But it's really, I think it makes me a better investor. Buffett kind of talks about, owning or running a business made him a better investor. And I think the experience has certainly been hugely beneficial. It's not like my returns are showing something massively changed since then, but it's good.
Very good. All right, Tim. Well, let's close this out. Where can our audience go and find more information on Solitron Devices?
SolitronDevices.com, or you can look up SODI on Yahoo or OTC Markets, and you can see links there to press releases and filings. You can learn more about the business that way. But the website covers a lot of things and products, and can get into a lot more of the details, and even all the way down to schematics of understanding the product and what it's doing. So there's a lot there.
Very good. All right. Well, Tim, thank you so much for joining me today on Due Diligence. And I invite you all to go and check out our next interview that we're going to be doing on Planet MicroCap, where we're going to be digging into your investing philosophy and just, your thought process on running the fund and all that stuff. But Tim, thank you for joining me on here, and I'll talk to you soon.
My pleasure. Thanks.
This podcast is for informational purposes only and is not provided as financial, legal, or any other advice. The information is not investment advice or an offer to buy or sell any securities or make any investment. The views expressed by guest speakers are their own, and any reference to third-party products, services, or information does not constitute an endorsement thereof by SNN or its affiliates. SNN expressly disclaims all liability for any individual's use of the information presented in this podcast.